Hello and welcome. You're watching our special coverage on Rupee Rout. I'm Ajay Sharma. The rupee today fell to a record low of 68.86 levels, pressured by a host of factors: a strengthening US dollar, capital outflow from emerging markets ever since Trump recorded a surprise victory in US presidential elections, and worries over the demonetization drive in India have all contributed to the sharp fall in the rupee, despite repeated interventions by RBI to arrest this slide. The rupee has now breached its previous lows of 68.85 versus the dollar. Clearly, greenback, this particular level was actually last tested in August of 2013. So this is a very significant level which has been breached. But that was a different time and the different factors were at play. That was, of course, the worst currency crisis ever faced in 2 decades. But what is the reason that we are going back to those levels? Today, of course, RBI intervened and it immediately has had an impact, some impact on the rupee. The rupee has fallen around 3% so far this month. It's the biggest fall against the dollar since August 2015, and though it has fared relatively better than emerging market currencies, which are also coming under pressure since Trump's win of the election. Foreign investors over in India have sold close to $1.5 billion, $2 billion in debt. So equity and debt both are witnessing outflows. That is also putting some amount of pressure. But overall, what will be the long-term impact of Trump coming there, emerging markets currencies coming under pressure? Which are the sectors which will be impacted, both positive and negatives? And to what extent is the recent phenomena of demonetization responsible for what's happening? And of course, a comparative of other currencies. We'll get you a 360-degree analysis on this particular show, which is Currency Rout here in India. We have lined up a very special panel to get you a complete lowdown. 4 experts will be joining us: Senior Regional Head of Treasury Advisory of HDFC Bank, Bhaskar Panda, and Founder CEO of IFA Global, Abhishek Goenka, will be here on the show. And of course, the Foreign Exchange Strategist of ING Group will be joining us from the phone line all the way from London for a global perspective. So let's begin the discussion. But before we go to our panelists, let's get in some action and an analysis of from our own research team. Poonam Sani and Darshan Mehta are joining us. Darshan, let's start with you first. You have analyzed sectoral impact of sharp slide in rupee coming in. Talk to us about which are the various sectors and how are they getting impacted by the weakness in rupee.
See, with the rupee moving to record lows against the dollar, there are several sectors which benefit or have problems because of this. The 2 sectors which have a direct impact and benefit are pharmaceuticals as well as IT. IT being the most, because if you're looking at a general thumb rule, if you're looking at if there is a 100 basis point movement as far as the rupee is concerned, the thumb rule is that the margins will improve anywhere between 30 to 50 basis points for the IT company. So most of the Indian IT companies have exposure to the dollar. So most of the frontline IT companies will benefit because of this move. Pharma is also one more sector, because the frontline pharma companies like Sun Pharma, Lupin, Dr. Reddy, Divi's, Glenmark, all of them have substantial sales as far as the US market is concerned. So with the dollar moving up and appreciating against the rupee, their revenues are bound to increase because of this. The other sector is oil. Now oil will have a negative impact as far as some of the rupee in fact will have a negative impact on the oil marketing companies, because the falling rupee is negative for importers like the oil marketing companies. Airlines, definitely it's a big negative. Their import bill goes up because they have to pay in dollars as far as some of their operations are concerned, as far as fuel cost is concerned. So airlines like Jet, Indigo, SpiceJet will be negatively impacted. Power companies will be impacted, especially the ones that deal with coal, because coal prices will go up because their payments will be made in dollar terms, so they will have to pay more. A lot of these companies have a lot of high foreign debt as well as FCCBs, Suzlon, Tata Motors, Tata Steel, Syntex, the Adani Group. So these are some of the counters that will be negatively impacted, and metals will have a positive impact given the fact that realizations are linked to parity linked. So the dollar moving up will be beneficial for some of the companies, especially Hindalco, which has a substantial US based operations because of Novelis.
Thanks for that, Darshan. Poonam, clearly rupee is coming crashing down. Talk to us about the factors behind it and what are you gathering from the industry Do you see some more weakness which is likely even from here on?
That's right. In fact, if you look at the entire factors that are impacting the rupee, we did see rupee hitting a record lows. These are the lowest levels that we have seen so far. It did reach 68.86 and went really past that. But it is a lot of factors, including of course, it's the dollar strength. The relative dollar strength has been pretty much high, with the dollar index surging to 101.9, highest level since 2003. Not just that, we're also seeing good amount of hike or uptick in terms of the U.S. Bond yield, and with the U.S. bond yield rising and the possibility of India interest rate scenario coming down, that is leading to a good amount of outflows both from the debt as well as the equity markets for India, and that is of course having a huge impact in terms of the rupee. Besides that, of course, it's the kind of overall macros that we are in because in India, which is giving some amount of resilience to the rupee. But look at the kind of foreign outflows that we are seeing. We have seen close to 3.4 billion worth of dollar outflows, both from debt as well as equity markets coming in there. Not just that, there is also a high likelihood of a Fed rate hike in December itself, and that is also keeping the markets on tenter hooks. If you look at the rupee performance versus the other EM currencies, we are definitely resilient. Yen, Malaysian ringgit, South Korean won, Indonesian rupee are the top losers versus the dollar during this entire session since the closing of 8th of November. But if you look at the rupee performance versus the majors, we are seeing some stark contrast there, wherein the INR has weakened, of course, against the dollar and the pound, but INR has gained against the euro as well as the yen. In terms of the future outlook, the volatility is in to stay. One of the government official even did mention that unless and until the rupee actually does not breach 69 to the US dollar, there is unlikely to be any huge amount of policy measures. We're seeing RBI intervention into the currency markets continuing, and possibly that will continue. But RBI so far has, of course, maintained its stance of only curbing the volatility. Brokerages like Deutsche Bank still see rupee hitting the 70 to the US dollar mark by year end, and possibly we may see some amount of still volatility and weakness in the rupee, even as much to even retain the export competitiveness. So we need to brace for some amount of further weakness and volatility there.
Thanks very much for that, Poonam. So that was our colleagues Darshan and Poonam talked to you about the factors at play, the areas to watch out for because of rupee currency domestically. But let's widen the discussion a little bit and get in our guests also into the show. Let's talk about the global perspective first, because though it may look like a domestic phenomena, global developments are also to a very large extent responsible for the kind of weakness we are seeing in the rupee. Viraj Patel is here with us. He represents the ING Group from London. Viraj, good afternoon to you there in London. All the emerging markets are sliding. India is not being spared. Talk to us about the kind of fall you are seeing in India, given the global factors at play.
Hi there, good afternoon. So yeah, right now I kind of agree this is all about dollar strength, driven by sort of this post-Trump reflationary theme playing out in the US economy. Markets are beginning to sort of price in a more tightening cycle consistent with the Fed's September dot projection. So this includes one hike this year and potentially two next year in 2017. And this repricing has sort of weighed on the MFX more broadly. Sure, noise around sort of Modi's cash crackdown isn't helping, but we point to sort of two factors which suggest this still is a real global story for the rupee. First, the rupee's sort of correlation with the rest of Asian currencies remains fairly stable, as that has in fact slightly increased in recent weeks. And when we look at the sort of non-resident portfolio outflows, the size of recent outflows has exceeded normal levels, but both debt and equity outflows remain sort of consistent with periods in recent history where we've either had this sort of strong dollar sentiment or global risk off. And in particular, the scale of non-resident debt outflows for now remains relatively subdued compared to the taper tantrum period in 2013. And so for us, from a global perspective, it's worth bearing in mind, we look at sort of the macro backdrop and compare sort of India's macro backdrop between now and 2013. The narrower current account deficit, strong domestic growth dynamics relative to the rest of the EM economies, and the adoption of an inflation target regime makes sort of India fairly attractive, and it's shaken off its fragile five status since 2013. And these medium-term positives for foreign investors will continue to make India attractive sort of once this global volatility eases.
Right. Viraj, stay with us. Let's also get in the on-ground report from a practitioner, and that too a very senior one. Mr. Panda, how are you managing your treasury desk? What's happening there? Are you feeling some amount of disruption in the last fortnight, a week, because of the developments in the currency space here?
I am not able to hear properly, but I'll answer your question. I think in the recent past, we had two black swan events in the form of the result of US presidential election, where Donald Trump became, the president-elect for the USA against, expectation of he not coming in. Second, on the almost same day, our demonetization drive that started. So those two together had a profound impact on the movement in USD INR, and especially because the dollar index moved higher, and as a result all the EM currencies had actually moved lower, and with that dollar rupee also has moved lower. But one thing also needs to be understood is that in between these, the Chinese yuan also have been losing ground, and they have reached a low very recently. So that factor also comes in while we are talking about dollar rupee. Fourth thing is that if you look at the forward curve because of certain kinks, because of the repayment of FCNRB, so on and so forth, has actually crashed quite a bit. Fifth is that we are talking about successive Fed hikes starting with say December. So all this together has moved the dollar bond market in the US. Therefore, we have seen outflow from both debt and equity from India, which is to the tune of probably $4.5 billion as of now. So demand has come from these sectors. Suppliers are not forthcoming because forwards have come down. So your yield in terms of say 1 year final rate for an exporter has come down quite substantially, even if a spot has moved by say 4%. So in summary, what I am trying to say is that dollar rupee has moved according to the movement in the global markets. However, going forward, I don't see this depreciation trend continuing. Maybe it might overstep a bit. It might go towards probably 69 or 69.25, but beyond that, for me, looks a little bit overstretched at this point of time.
Mm-hmm. Right. Abhishek, what are your thoughts? You are an active trader. You trade and advise a host of corporates on how to trade or at least hedge their currency bets. Talk to us about today, because there was a steep fall today, and also last couple of days have been at your desk.
I think, Ajay, today we have formed headlines. That's different about today. Last 3 days, the rupee has been depreciating. One interesting point which I would like to put here is that when the markets are open in India time, that time we do not see much movement in the dollar rupee. It's moving in the range of 15-20 paisa. Time and again, we are seeing interventions coming in the market. And as soon as the markets get shut at 5 o'clock, in the night, the actual market starts moving in the international markets. Today, rupee is traded across the world, right from Dubai to New York to US to Singapore to Hong Kong, everywhere. Now, as soon as 6 o'clock starts hitting, the US market starts getting on. The US dollar starts getting strong there, and then we see the action starting in rupee. Now, that's something which is very difficult to control, and by the time the rupee closes by around 11, 12 o'clock in the night, the price of the rupee dollar becomes the benchmark for tomorrow's opening, and that's what has been happening in the rupee in the last 3 or 4 times when the rupee has depreciated heavily. So that's one point. Second is that time and again, what we have seen in the markets that whenever the rupee has broken a range, now last time we saw the range of this 66, 67, which was there for like a sweet long time of for say 4-5 months, and the volatility was all time low. And now since that range has broken, I think 2-3 rupees or 4 rupees in the rupee was not something which one should be shocked of. We saw movement in Japanese yen from 102 to 113 in like 10 days. We saw moves in dollar index which we have never seen in the last 7-8 years, and the index is moving at 101, 102 levels. So if we can see the dollar index breaking the range, we have seen the 10-year which has come down from 4% to 1.35, and now that trend has also broken. It's going to 2.4. We have seen rupee yields at all-time lows, forward premium crashing crazily. In fact, the November premiums are now in discount today. I do not see the rupee halting. There might be some intermediate corrections since we have seen a move of 2 rupees. But then I think 69.5, 70, 70.5 is very much possible in the current markets. So what we are suggesting for people, for exporters now, typically they have this concern that whether we should sell or not. So either we are asking them to get into options, we are asking to take some put spread strategy. For importers, they never want to hedge because the premiums always hit them. Either they hedge, paying a little premium because the premiums have come down, or they take a strategy like a seagull in the options market, which is also very lucrative. But then US dollar is complete buy for the next 5 to 6 months. On a longer term, we are looking the dollar index hitting 110. That's our target for the medium term in the next 5 to 6 months.
Right. Another school of thought, Abhishek, of course, is that now the weak bear is actually shorting the rupee. The strong ones are enjoying because they are deep in the money. We'll talk about that, but let's also get in Ajay Sahai's view. Ajay, we were all discussing about the factors which are pulling the rupee down, global and domestic both. What are your thoughts? RBI intervention not enough right now?
In fact, if you are looking at the movement of rupee is not an exception. In fact, all the currencies of the emerging economies are facing similar trend. If you look at Chinese yuan, it is at 8 years low, rupee is at a 3 years low. And look at the currency of Mexico, Malaysian ringgit, South African rand, Brazilian real. They all have depreciated in the range of 5 to 6%, Mexican peso by around 11%. The prime reason for that is the expectation that US Fed rates are likely to be raised, and that's why there is flight of capital from all emerging economies. Secondly, FIIs in India, they have converted their equity and bonds into dollar assets, which have also created demand for the dollar. In fact, in the month of November alone, the FII have sold equities and bonds worth around $3.25 billion. Thirdly, at this point of time, importers are also rushing for the dollar because at the end of the month, they require dollar to settle their imports bill also. So all of this put together with little role of demonetization also, because Sensex is not doing well, there is a rush for the dollar, and that has led to this. But I will not treat this as a phenomena which is for India. This is something which is being witnessed across the globe.
Right. Viraj, in the last 10 days, several leading global brokerages have started upgrading their GDP estimates for America. It started with Deutsche Bank. Today, HSBC has also come out and upgraded its GDP outlook for US. They are saying Trump means growth. If that indeed is true and the economy starts really coming back big time, can that happen with dollar not strengthening even substantially from current levels? And if that is true, on a slightly more medium term, what do you see the future of emerging market currencies like us?
It's a good question. I think when we look at sort of the Trump effect on the dollar, I think the main factor is there has been a lot of expectations priced in, not only from the Fed side, but also expectations of a potential fiscal policy package from the Trump administration in the first 100 days. This has sort of driven Treasury yields to sort of obviously new highs. We've seen sort of the 2.35% level breached yesterday on Treasury yields. And the US economy has a lot of momentum going into next year. Fourth quarter GDP looks to be in a 2 or 3 handle as well. And essentially, I think the bottom line is that now we need to start to see actual policy announcements. I think a lot of expectations has been priced in. So we'll have to see what the Trump administration delivers in the first sort of 100 days. We expect sort of a Trump light, and by this we mean sort of sufficient sort of fiscal steps in terms of mainly focusing on sort of tax reformation and low taxes and potentially a US repatriation holiday. All of this should be dollar positive on the margin. but we're not expecting sort of any sort of spillover into sort of from protectionist policies into global risk off. So we expect sort of this benign environment for equities to also continue. And that should sort of point to a muddled sort of outlook for EMFX in the initial stages. You'll see emerging market currencies overall potentially react negatively to higher US Treasury yields, the initial impulse. But once the dust is settled, you expect sort of equity markets and global growth and that sort of story to kick in and provide a layer of support to EM currencies. So it's a tricky environment. We'll expect the dollar to sort of stay bid going into the first couple of quarters, but we'll actually need to see deliverance of policies and as well as real tangible growth signs in the US in the latter half of the year. And that's still a question mark right now.
No, fair point. You're right. Delivery of the promises and delivery of policies is a big direction giver. But right now, it's sentiment at play, isn't it? Okay, let's get in Mr. Panda and Abhishek back because I did see that both of them have got different opinions. Mr. Panda believes that rupee is around here, may not weaken a whole lot. But Abhishek believes that no, it's just started. Abhishek, you are running positions for your clients. Talk to us the nature of positions you have right now. What's the book looking like? And how much more weakness in what time period are you estimating and taking into account in your trades?
Ajay, of course, we advise a lot of clients on their foreign exchange positions. I'll tell you what exporters are doing right now. So a lot of exporters have booked for 40%, 50% for long-term exposures. And they've been holding in the market to book because everybody has seen in the past that when the rupee moves in a most erratic manner and when the move is more than 3, 4, 5 days, then obviously it moves a lot more. And that is what we have seen in the past when the rupee moved from 46 to 52 and from 56 to 62 and then 67 and those kind of moves. So people are scared. They're scared to build up a very, very strong short dollar position at these levels when the global currencies are bleeding every single day.
Right.
As per the importers are concerned, I do not see them panicking till now. I think tomorrow, all the newspapers will have headlines because rupee has broken the historical high. And I think the phones would start ringing that they would like to come in the market and cover. But since the premiums have come down drastically, I think they would not look at covering aggressively. Once 69 breaks, I think people will start coming in the market and start covering in panic. That's what I feel.
Panic is yet to play out according to you. Mr. Panda, what levels would you watch out for given that tomorrow is Friday, the weekend, last trading day for the currency or intervention by the RBI and also on a slightly more medium-term basis on the levels?
I think going forward 69.25 as I said earlier is something which I look forward to selling. I am not agreeing with what Abhishek told. That it may depreciate as it had done in the past. Probably it is getting overdone a bit. We have to lose some weight. Rupee has to lose some weight. Already done around 400%. So going beyond this looks a little difficult. However, having said that, the exporters are not enthused right now to sell because the forwards are down. So therefore, they might wait out, and we need to see how the demand comes into the market. Today, FI demand is there, and once that subsides a bit, I think we should be more or less in equilibrium, and we should be happy. It should not go beyond probably 69.25 or max 69.50. That's my personal view of yours.
Right, Mr. Panda. We'll connect on this note once again. Let's see what levels market has to offer to us. Gentlemen, all of you, Viraj, Abhishek, Mr. Panda, Mr. Sahai, thank you so much joining us on the show for a very engaging discussion on the rupee weakness. We'll connect with you with some more new interesting topic from the currency and commodities space in yet another episode. Thanks very much for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.